Good afternoon. Hey y'all, how's everyone doing? Guys, if you can hear me, let me know, put it into the chat. And if you can see my screen, let me know as well, put it into the chat. How you're doing today? Hey Mark. How are you doing? Hey Joe, hey Bob. Super. Hey Neil. Hey James. I'm doing well. I'm doing very well. Had a couple of good trades. Unfortunately, I'm a little bit distracted. I was looking at the yen just before this session. So slightly distracted with the yen right now, the US yen in particular. How you are doing? And as you are all streaming in, as people are streaming in, if you can, do me a favor, put it into the chat. Let me know where you're joining me from. I will get started in a couple of minutes. Hey Jamilu, how are you doing? Hey there. It's good to be back. I was away for a week, down with COVID, but I'm back. Coughing a little bit, but we'll be there. Jaldin, you've got almost all the letters of my name as well, just in a different order. Have you guys been trading well? Today we are going through the IC Markets webinar on the news trading strategy. So, one of the things that I hold very clear, very dear to my heart, I do a lot of news trading. So I'm super happy to be sharing that with you. Market has been ridiculously weird. Everything is choppy, shooting up and down, doing all kinds of stuff. This week, this week's only been 2 days old. Yesterday I had no trades, and then I had a couple of trades today, so happy about that. All right, a minute more and we'll get started. Again, for those of you who are joining us right now, thank you, welcome again. Hey Simon, how are you doing? And we will be going through today in about less than a minute's time the news trading strategy for today with IC Markets webinars. Is anyone else's video freezing? I don't, maybe not. So Bob might have to restart. Just do a quick restart. We'll wait for you. It is a very nice topic. Love it. Right, so if you guys are ready, let's get started. Again, welcome. So IC Markets webinar on the news trading strategy. There has been quite a number of news that has been released. We've seen very big movements, both scheduled and unscheduled news releases. So, one thing I always want to remind everyone, particularly when it comes to news trading, is that news trading, if you are relatively new to trading, then I would try to avoid news. All right, I'll try, if you're new to trading, I'll avoid trading the news in particular or during the news. Like what Diana is saying, don't trade for the news, wait till the market cools down after the news, then get into the trades. Okay, so what I would say is that this is a good topic to learn, to practice on a demo account if you are new. As you get more experience, as you manage your emotions a lot better, then this will be something that you want to adopt, because this will be the quick trades, right? The quick trades as the market fluctuates, as the price moves, quick trade in, out, while price is moving. Okay, so again, quick reminder is that when you are trading the news, this could become a very emotional activity, because you see price moving shooting up one moment, shooting down the next moment. There are reasons why those happens. You don't want to be caught in the emotion. You don't want to be caught right at the top or right at the bottom and then regretting almost immediately after you enter the trade. Okay, so I just wanted to put that quick warning there for everyone. Hey Desiree, how are you doing? Hey Kelvin, good to see you again. So as usual, any information contained in this webinar should not be construed as advice and is presented as educational material only. International Capital Markets Private Limited has not considered your objectives, financial situation, and needs, and you should consider its appropriateness for your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. Right? So what it means is that I will be sharing with you some ideas, some methods, the way I look at news, the way I trade the news, the way I approach the markets. If you are going to be jumping into any trades, please make sure you do your own due diligence. For me in particular, when I look at news, I tend to size down whenever I'm trading in news. I know a lot of people do it the inverse. They size it up when they trade the news because they're thinking it's a quick trade. Whenever there's a news, it's always the uncertainty. So when I approach uncertainty, I size it down. I'm happy to make a quick couple of pips here and there, even if it's on a smaller trade, rather than trying to size it up and trying to think of the news as the big windfall. All right. So do your own due diligence, check your leverage, check your margins before you jump into any trades. Few things to get through today. Yeah, uncertainty due to the known unknowns, right? Right. A few things to get through today is we'll go through the basics of news trading. I'll show you the key events to watch out for, how each news event affects the markets, and a couple of news trading strategies. Those of you who have, I think most of you have attended my previous session on the fundamentals. This is a bit of an add-on to the fundamentals, advanced fundamentals session, because I will be talking about similar news events that you should be paying attention to. Okay. Introducing myself, I think most of you know me very well already. My name is Jin Dao. Everyone calls me Jin. I'm one of the investment analysts here at the Everest Fortune Group. I used to manage a multi-million-dollar FX fund. So I'll be sharing with you my thoughts, my journey, my experience as I approach the markets. If you have any questions, please feel trading-related questions, please feel free to put it into the chat at any point in time. Let me know, right? Don't wait for me to pause because we might have moved on from the topic already. Just let me know straight away. I'll be happy to address your questions, help you understand it a lot better as well. Okay. One more word is missing, FTMO. We as a group, we are taking on that challenge as well. I never really took on the funded trader challenge because previously I was managing the fund, so that took up all my attention. I didn't want to distract it from the fund, so now I am actually trying one of the funded traders because everyone's been asking me to try, so I've taken it on board. I will be testing it out. I'll be trying, and then we'll see how it goes. Fingers crossed. Do I know a 20 pips challenge? I used to do a 20 pips challenge for my people that I coach. I used to do the 20 pips challenge. Very interesting way to approach the markets. I am doing an MFF if I'm not wrong. I think it's called MFF. All right. So the basics of news trading. It's actually, whenever I used to tell people about news trading, they will approach it in the sense that, hey, it's very dangerous. We don't know what's happening. It's impossible to guess what the news is. Most of the time, whenever anyone trades the news, they end up losing, right? So most people try to avoid the news. Actually, when you start trading news or when you try to approach news trading, it actually can be boiled down to a few basics. Okay, 4 main factors. What I want you to think about when you start looking at news is 4 main factors to pay attention to. Right? Oops, my pen is working. Okay, so 4 main factors, and this is what happens when a lot of people trade, a lot of retail traders approach the news is they jump in, they look at the news, right? They look at something like that and they go, oh wait, it's a red number, it's a green number, I want to buy or I want to sell. Just randomly based on emotions. You're always going to lose money that way. What I want you to think about before you jump into any news event, right? I always plan all my trades before the news event. First thing I'll pay attention to, what news event to pay attention to, right? I know which ones I want to look at, which ones I want to ignore, when I'll look at a particular news and when I'll ignore particular news. I'll give you the news events to pay attention to for this period, all right? There are some news events that typically or usually previously would have a big impact, but not so much right now. So there are news events to pay attention to and also the expected data, right? Because how you get news events, you always have the actual, right? You have the forecast and you have the previous AFP, right? So you always want to compare what's the actual number going to be against the forecast and against the previous. It's never just what the actual number is going to be. It could be a red number, it could be a green number. It depends on what it's compared against the market forecast and what it was before. Okay, so news event to pay attention to, what's the expected data, and this is one thing that not a lot of people do is the previous reaction, right? Price reaction from previous news release. The price reaction from the previous. So previously when Australian on the RBA has been increasing interest rates, what has the Aussie dollar been doing? Has it been going up or has it been going down? Right, put it into the chat. What do you guys have you guys noticed it? Whenever the RBA increases interest rates, has the Aussie dollar been going up or down? Not what it's supposed to do, or what it actually did. I've got a couple of people saying up, one saying down, two saying down. All right. So we've got a mix now, 50-50. We've got up and down, 50% saying up, 50% saying down. All right. So you always want to pay attention to that. And I'll tell you more about it in the next slide. Right, the price reaction from the previous news release. Then you want to consider what's the current trend, right? You want to consider what's the current trend, because imagine that trend is now pushing towards the upside and then there's a news event right there. If it's not a big news event, if it's not an event that could reverse prices, then what you're likely to see is, despite a bad news, it could just come down a little bit before pushing back up again. Okay, or if you're looking at an upward move and then the news comes out and it's strong, then you could see it continue pushing towards the upside. So you always want to consider what was the current trend, what has price, where has price been moving before, and then lastly, you always want to look at where your support and resistance levels are, because if price is moving up and it's approaching a resistance level, I wouldn't want to get into a trade. Despite the news, despite whatever could be released in the actual data here, I would always wait for price to break above the resistance before I would consider it possibly moving towards the upside, right? So always consider where your support and resistance levels are, what the current trend is, well, what happened previously when the news was released, and then also what could be the news release, right? So 4 main factors. If you can go through that and apply that across to all your analysis before the news, not when the news is released, not after the news is released, do it before the news is released, you know whether you want to actually be considering a trade or not. Most of the time, when I approach a news event, when I look at a schedule like this and I go, okay, there's a news event coming out, Aussie cash rate, will I be trading this event or not? I'll be looking at where the Aussie dollar is compared to the trend, where the Aussie dollar is compared to the support resistance levels. If it all fits, then I'll be like, okay, I'll watch this news. If not, then I wouldn't even watch the news because I wouldn't be looking to enter a trade on the release of that news. Okay, so that's how I plan it a little bit. You know, this is the news event, and then the expected data. You can see that's the actual number there, the forecast, and the previous. Okay, so in this case, you know, cash rate is interest rates decision for the Aussie. This is in August. It was a 1.35%, came out expected 1.85, came out at a 1.85. So it came out as expected, but higher than previous. So all in all, we're looking at this as generally should be a good news. We should be seeing the Aussie dollar push towards the upside, but typically, you know, as you start to understand the news more, the RBA tends to forecast or tends to project their decision very early on, so it becomes a bit of a priced in scenario, right? So when you start considering price reaction from the previous news, you get the whole priced in scenario idea. I've got a question here. When you say from Desiree, so when you say the break the resistance, could it have broken and closed above on a 5-minute time frame and may not break the H1, which is still 30 minutes away? So how do you consider that it's broken before you enter? Do you wait till H1 closes, or what's your minimum time frame? I will show you which news or which method, which strategy to trade on different time frames. But you know, typically, if you are new to medium experience, I would say stay on the H1, stay on the M15 time frame. And if you have to come to the point where you're looking at price coming close to that resistance level there, so let's say this is resistance, and your price is within this area. Remember, we don't consider the resistance as a line only. We consider the resistance as a bit of an area. So if it's within that area on the 5-minute or on the 15-minute time frame, then I would say wait it out, right? It's still within that area. I'll wait for it to break towards upside out of that whole resistance area before I start considering whether I want to buy it up, or you know, if it's turning back down, whether to sell it down. Okay, I hope I answered your question there, Desiree. So that's the news event and then the expected data. Okay, I'll show you a bit of an example here. This is the Aussie dollar, right? I should have let that label there. This is the Aussie USD, pardon my scribbles. Okay, and this is based on the RBA interest rate decision. You can see here that on the 7th of June, 50 basis points expected 50 basis points decision was released. The Aussie dollar actually spiked around, and then after that came back down. So that moment it actually dropped, bounced up a little bit before turning back down. On the 5th of July, you can see that. So this is how you'll be looking at this as, again, scrolling back, current trends, support, resistance levels, and the previous news. Okay, so you see previous news, Aussie dollar actually 50 basis points increase, it dropped. All right, 50 basis points increase and the Aussie dollar drop. Come to July, imagine you're waiting for that news there at 11 o'clock on the first Tuesday of the month, and you're expecting at that point overall trend on the Aussie dollar is towards the downside. Right, overall trend is towards the downside. You note that the previous month it actually dropped on release of the news, and then you'd see a bit of a support and a bit of a resistance level there, right? So as the news gets released, 50 basis points, same decision, it was projected before that, then we saw the Aussie dollar drop. Okay, so this is how we're putting that 4 points that I shared with you early on, put it together. We're considering what news to pay attention to. In this case, this is the RBA interest rates decision. Okay, and then we saw the news gets released, the same as previous decision, reaction towards the downside, dropping as well as the news got released. We saw the Aussie dollar drop. Okay, same thing again on the 2nd of August, same decision. This time, although it's moved up recently, right, but overall still trending towards the downside. As the news gets released, you can see if I drew this right across, bit of a resistance level there, rejecting that resistance, turning towards the downside. Same thing, same result. It dropped lower, and then again on the 6th of September, as the news got released, again that downward move. Again, if I drew a bit of that level there, a bit of a resistance level there, a rejection towards the downside. Okay, so answering a question there, may understand why. Just understand a bit more on Aussie dollar. Why does it drop when interest rate hikes? Why different from the US? There are several reasons why the Aussie dollar does drop despite a interest rate increase. So just based on the RBA alone, is that when the RBA, they always project, right, or they have communicated that they would be increasing rates. They've always said, early on that they'll be increasing rates. They'll still be looking to increase rates, so it gets priced in a little bit. So that's one reason why we see the Aussie dollar drop despite a rate hike. And then also remember that as much as you're trading the Aussie against the US dollar, the US dollar has been very, very strong, right? So it's been very, very strong. So despite that overall Aussie dollar interest rate increase, we're still looking at US dollar strength, and that's why we see that push towards the downside. Right, you got it. Right, so putting it all together, interest rate hikes, typically what we normally see, even if if we didn't see the US dollar against having that much strength, normally what we'll see in a normal trading scenario, this was, if we were 3 years ago, right? Back when I was trading 3 years ago, you see a downtrend, and then Aussie dollar rate increase. What would normally happen is you see a bit of a push towards the upside before turning back down again. This time, or over this period, especially this couple of years, we actually see no upside move, just that push towards the downside, because it's been priced in and we've seen a lot of US dollar strength. Also, people's spending sentiment could be a factor. Do you think? Yeah, it is a little bit of a spending sentiment, mostly for the US, not so much for the Aussie side. I think we just had the retail sales number last week for the US. Strong retail sales numbers in the US, despite inflation running hot, a lot hotter than expected, and interest rates still climbing. We are seeing the US still spending quite strongly, or sentiments being quite strong. So it does add up from that. So that's one of the factors that could play as well there, Kelvin. Jaldin, I did a martingale strategy 2 weeks ago, but no, I don't trade using the martingale. I don't trade using the martingale. For me, it's one or two trades at a time. Get it in, get it out, and then take on the next trade again. So I don't use a martingale during the news events. Okay, so just zooming in a little bit here. So this is the overall view of the Aussie dollar with the interest rates decision. Just zooming in on the August rate hike decision. Oh no, the July rate hike decision. You can see here, this is how I would plan a news leading up to a news event. All right, this is how I plan leading up to a news event. I would say that that's the news event there on that green line. I can see that overall price has been pushing towards the downside. Recently, it's pushed up. It's hit a resistance level, right? And it's rejecting that resistance level. So I would be looking at this going, okay, based on the previous session, on the previous news release, I'm looking for Aussie dollar to drop because of a 50 basis point rate hike being priced in. I've got my resistance level there. I know I've got a support level there. What I'll be looking for at that point is to look to sell on release of the news. So how I approach this is either I'll look to get in before the news, I'll look into getting on release of the news, or for those of you who are a little bit less risk accepting or more risk adverse, I'll get in after the news. All right, don't be afraid to get in after the news, which would either mean that you have a good safe entry, a safer entry to get in because it's already gone past the volatility, gone past the madness, or in the worst case scenario, you know, price has moved on and you didn't get into a trade, at least you didn't get into a bad trade. Missing a trade is not the worst thing. Getting into a bad trade would be worse. Okay, so if you did sell at that point there, then stop loss. So at that point, we were looking to sell. Stop loss will be above that resistance. Take profit will be towards that next support level towards the downside. And you can see that would have been a very nice trade towards the downside. Okay, which sessions do I usually trade? I get in, I start looking at the markets pretty much from 9-10 o'clock in the morning, 9-10 a.m. in the morning, GMT plus 8, and I go all the way till, well, now 5-6 o'clock. I do a bit of a webinar, I take a bit of a break, and then I'm back into the US sessions from 8 o'clock all the way to 12-1 at 2 a.m. So I'm almost all the time, I'm facing the charts almost all the time. Not what everyone should do. I don't think this will be a method that most people should approach the markets with. It takes a lot of different mindset, and you really have to like looking at the charts to do this. I think most of you are retail traders, so if you even just set aside a couple of hours a day after work, look at the charts, set it up. If there is a reaction to a news, then look into jumping a trade or not. Right? You could be setting orders as well, or not. My wife can't be happy for all those hours. Well, she's used to it and she's quite happy with the results of it. So she's quite used to it. She's happy. She's not unhappy. So, all right. Do you think this market status should be approached very carefully? This market status, as in the current market scenarios, I'll show it to you onto the charts. I do think that right now, what we're looking at in terms of the market trading opportunities, you shouldn't be looking, my view is that you shouldn't be looking at medium term kind of trades. You should be looking at relatively short term trades. All right, relatively short term trades, because it has been very choppy. We're seeing a lot of interventions. So that, remember that when you look at news trading, there is planned news and there is unplanned news, right? News that you can see on Forex Factory that has a time to it, a data expected, a data being released, and there are news that just comes out of nowhere, market intervention or central bank intervention, and we see big spikes all over the place, right? So my approach right now, what I've actually been doing in the markets right now, I've actually been very short term. I'm in, I'm out of a trade, I'll make that 20-30 pips, I'm out, I'll reevaluate, I'll look to get into another trade, moving from that. I don't hold on to trades at this point just because there's too many tails and spikes in all different directions. So good question there, Sammy. I hope you take on that opinion as well. All right. So now we have here the same Aussie dollar, 2nd of August, 50 basis points rate hike. What you see here is that despite having a bit of an upward move before the news, in the lead up to the news, we actually see price rejecting that resistance level. All right, rejecting that resistance level, almost a nice round number there. What I would be looking at is for that downside, because we've already seen in June, news release, Aussie dropped. In July, news release, Aussie dropped. What I'll be looking for here in August, news release, go to Aussie drop. Again, same thing, I'll be looking to get into a trade. Again, either, for me, depends on whether I've been making money. If I've been making money on my trades before the news event, I'll get in before the news. I'll take on a little bit of risk. I'll get in before the news. If I haven't been making money before, I'll put in a pending order. And if I've been losing money before, then I'll sit there, wait for the news to be released. Then once it gets released, as price moves, then I'll get in and try and scalp a quick trade towards the downside. Okay, so here in this case, 2nd of August, 50 basis points pushing lower. You can see if you're looking to sell at that point there, stop loss will be above that resistance. Take profit because we got a bit of a support level there. That will be a take profit level. Okay, and you can see as that news gets released, pushing towards the downside. Sorry about that, Kelvin. I guess you guys heard that. All right. What happened? What happened pound when they announced to buy back bonds or something like that? Yeah. Last night, well, they did announce about buying back bonds during one of the sessions I was doing, but last night the UK actually spoke about, or the UK government actually spoke about reversing or doing a U-turn on the current tax cuts plans, right? So they're doing a U-turn on tax cut plans, and that's why we're seeing that strength to the pound dollar. Just before the session, we started seeing the pound dollar drop. I'll check what the pound dollar is doing right after this as well. All right. I do enjoy scalping during the news, but not every news is a scalping opportunity. All right, so don't get caught out. Not every news is a scalping opportunity. Can you see the US yen on the 15-minute time frame? That's a very weird reaction. I'll get through this and then we'll look at some charts. Okay. So key news events to watch out for. I think you guys might recognize this table. Back in 2008, 2009, it was during the GFC. People were losing jobs left, right, and center. So the economic focus or the data to focus on was employment and wage growth, right? So employment and wage growth data, back then we were looking at the NFP, right? Would the employment data in the US recover? Are they earning as much or earning more than they were before? During the COVID pandemic in 2020 to 2021, as economies were closed, right? Everyone was on a shutdown. GDP crashed. GDP across all major economies crashed. Then everyone was focused on the GDP, whether they're going to recover, how quickly they're going to recover. Central banks, governments were pumping money into the economy to stimulate the growth, to stimulate the gross domestic product, to keep people spending, to keep people producing. And because they kept pumping money in, right, this led to a lot of money being pumped into the market, a lot of stimulus being pumped into the market. This led to the current problem that we have right now, where we are fearing a recession in 2022, 2023, because inflation is running high. Inflation is sky high right now, and interest rates have to follow suit. All right, we're seeing central banks increase interest rates as well because there's so much money previously being pumped into the markets already. So now, we're seeing inflation climb out of control, and we're seeing central banks having to react to increase interest rates. So at this point, main key news events that I pay attention to is interest rates decision and also the CPI, or in the inflation data release. All right. One other news event that I used to love trading this, not so much now because it gets a little bit less lasting effect. I would say less lasting effect. It's the non-farm payroll, the non-farm employment change. This happens on the first Friday of every month, right? First Friday of every month, the US releases a non-farm employment change data, telling you what's the change of employed people during the previous month, excluding the farming industry, because that's very seasonal, right? So job creation is very important as it leads to consumer spending, and overall economic activity. All right, there you go, Pedro. Just a quick recap there. Anything you want me to add on to that, Pedro? Any questions? All righty. Okay, so job creation, like I think Kelvin was saying, it's about the consumer spending, more people working. As you work, they spend more. As they spend more, overall economic activity increases, more production. So NFP is a first Friday of the month news, and it's a high price volatility event. What usually happens, or what used to happen with the NFP, is that it would have a bit of a spike, a quick retrace, and then a continuation towards the upside. Right now, this was back in 2016, 17, 18, well, pretty much before 2018, this would be the kind of news events. If we had a bad US data against the Aussie, for example, we see a big spike towards the upside, a retrace, and a push towards the upside again. If we saw a stronger US dollar, then it'd be a big spike down, quick retrace, and then a continuation towards the downside. Right now, why I say that the non-farm payroll is not so fun to trade anymore is because what happens is we see a spike on the news release, a retrace, and then pretty much a consolidation right across. Right. So if you miss that first move, or if you reacted too late and you get in after the first move, you would normally get caught right at the top if you bought, and then it'll be a bad trade from that point on. So used to trade this a lot, not so much right now. I still try to look at it, but it hasn't given me that many trading opportunities so far. Do you trade events relating to the US election? I didn't do the last election. I actually traded the Trump and Hillary election quite a lot. I was one of the few. I did think that Trump was going to win back then, so I traded Trump Hillary election. I didn't trade the Biden election. Typically, U.S. elections drags on for quite a long time, so not a very good trading event, right? Because it drags on a little bit, and then unless you have a very controversial election, for example, Trump and Hillary, then you're not going to see very big price volatility as well. Okay, so that's the non-farm payrolls. Interest rate decision, major event, major high volatility event, especially on the US dollar, especially on the pound and the euro. We've seen the Aussie and the Kiwi dollar a little bit more predictive, a little bit easier to predict the Aussie and the Kiwi dollar, but the euro, the pound and the US dollar a little bit less, and even worse so on the US Swiss franc. Okay, so this is the Aussie against the US, the Kiwi against the US. I would rank those as a good interest rate decision to try and trade. The Fed Reserve, the US, I would say you would want to look at this after the event, right? During the news, once the news gets released, you're going to see some spike, but it usually has a press conference, and the press conference is where the volatility comes around. So you want to be more careful. I would say do this only after the event, right? After the event. And then the Swiss franc, I love trying to trade the Swiss franc, but it's always too volatile. It's always a bit different to what I expect. So I tend to just watch and not do too much. I pay attention to the Aussie, the Kiwi, the US, Fed, the pound, and also the euro. Oh, and also the CAD. Okay. than inflation data. This is the key event right now that you should be paying attention to. We always see big news events or big price volatility, and it's quite simple, relatively simple to trade the inflation data release right now. All you don't have to remember how is inflation being calculated, how is CPI being calculated. You just have to know that the target CPI is 2 to 3%. Target CPI is 2 to 3%. I'll show you here just today, okay, the Kiwi CPI quarter on quarter got released at a 2.2%. It was a 1.7. It's expected a 1.5. So they were expecting inflation to actually slow down quarter on quarter. But what actually happened was it got released stronger than expected and stronger than previous. Right? Stronger than expected, stronger than previous. Based on this, if I didn't show you the charts at all, what do you think would happen to the Kiwi dollar? To the NZD USD, what do you think would happen? Would it go up or should it go down? Put it into the chat. Don't look at the charts. Don't refer to your charts yet. All right. Okay, so we've got a bit of a mixed answer here. Good job, Pedro. I like that answer. All right, so yeah, we were expected to go up because, hey, inflation is running high, higher than expected, higher than previous. This leads to expectation for further rate increases to come from the RBNZ. That's why we saw that push towards the upside, or we're expecting a push towards the upside on the Kiwi dollar. So what you actually see here, this is the Kiwi dollar on the M15 time frame. Okay, so like we were just talking about before, resistance level there, right? So I have a resistance level right across. This is a recently, so this is on the 15-minute time frame, recent upward move. Support level, near-term support level, we can see at those points there. This line is just before the news, because if I put the line there, you wouldn't be able to see the candle, but this was the news release. So what you'll be looking for here is that you could be looking for an entry before the news or during the news. That point there, right? On the 15-minute time frame, you could be looking to buy there. Stop loss at the bottom. Take profit right at that resistance level there. Okay, so you see that first 15 minutes, the price actually shot up, came back down, and then slowly pushed towards upside towards that take profit level already. Okay, so this is how you can plan this news, even if we came to the point where leading up to the news. I'll take all that away. If you didn't know anything before the news event, you're sitting right there, right at that line, you would notice upward move, recent upward move, support level, resistance level. Even if you entered before the news, you'd say, can I buy at that point? Stop loss, take profit, positive. You can see based on this already, there's a positive risk reward ratio towards the upside based on the news. This would be a enter before the news event kind of trade. The trend will continue without retraction. Yeah, no, it did continue towards the upside. There are always going to be a bit of a retracement because we never see price always move in a straight line. We're going to see that zigzag. So we actually saw it hit, come back down, and then push towards the upside again. In this case, you see that it's a small move, right? You see it's a small move because this was CPI quarter on quarter, right? You see quarter on quarter, it's a relatively small move. It pretty much went from 5640 to 5680, about a 40 pip move on a news release. What about when we start looking at the US CPI data year on year? Right, James, what's the ideal time frame to trade the news? I'll share that with you towards the end of the slides, so bear with me. I'll give you the strategies to get onto that. Okay, so how to look at this? Wait, what was I saying? Okay, in terms of this was quarter on quarter. Compare it to the US CPI data year on year. Was 8.3, expected a slowdown to 8.1, but it got released at an 8.2%. Remember, year on year, being a US data, as it comes out at 8.2, I'm not going to ask you the question again, because we all know that as that data gets released, we expect the US dollar to push towards upside, because we expect that interest rates is going to have to increase to try and bring CPI down. Okay, so what you see here is that this is the US CAD. This is the US CAD, right? And I like this. This is one thing that I want you guys to start looking out for, right? Before, in the lead up to a news event, in the lead up to a major news event, what you tend to, I love it when I see this, is that horizontal consolidation, right? The horizontal consolidation in the lead up to a news event. And then you know that once it breaks out, you're going to see a big move towards the upside. This is a big move. This was on release of the news of the US data at 8.2%. We're expecting dollar strength. The dollar actually shot from 1.38 almost towards the 1.4 level, right? Almost a 200 pip move towards the upside on the US CAD. But how to identify this potentially big move is that horizontal consolidation. Okay, what you can be looking for here is that there are ways to trade this, because normally if you are looking to trade on release of this news, you probably not catch that move. You'll catch right at the top, or catch, you know, not all the way. What you can be looking for is identify that consolidation, and then have your pending orders above that point, right? So I would have a pending buy, and hey, you never know what the news is going to be. So while you have a pending buy above that consolidation, you also have a pending sell, right? So once you find that consolidation, you could set up your trade, a bit of a straddle, a pending buy, a pending sell. Once price shoots up, breaks above that point, you know, your sorry, your pending buy, your stop loss will be below, your sell, your stop loss will be on top. By your take profit, you could actually stretch it up, right? And then this would be a way that you could actually catch that move, right? This is one other way. So to catch when you're trading the news is once you see that consolidation. I wouldn't do that kind of consolidation. I wouldn't put a pending buy or sell if the consolidation is too wide, or if it's not horizontal. If it's a bit of a diagonal like that. Oh, my voice is going. Okay. If it's a bit of a diagonal like that, then I wouldn't put a pending buy or sell. I'll only be looking if it's a horizontal consolidation. Then I'll be looking for a buying opportunity, pending buy or pending sell. Once it shoots up and activates your pending buy, then I would cancel this pending sell. If it shoots down, and then I'll cancel my pending buy. Always make sure you cancel off the other pending opportunity, because, one second. All right, always make sure you have that cancel, because you don't want to be buying, shoot up, you don't close the trade, next moment it shoots down, then you have two trades running on one losing and one winning. Is not going to be a profitable scenario, right? So always make sure you cancel out the trade, the pending order, as it shoots up, look to get out of your trade as it hits your take profit level or it reaches a key resistance level, right? Never forget that resistance and support levels. All right, so how does each news affect the markets? Always remember there are short-term effects and there are medium to long-term effects. Short-term effects comes from news where you look at employment change. It's a monthly number. Every month they release a new number, or even for the US, every week they release an unemployment claims number. It's going to have a short-term effect. Retail sales number can be seasonal. Retail sales numbers can be affected by employment. Retail sales number can be affected by overall global sentiment. So it becomes a bit of a short-term effect as well. And the PMI data as a monthly number also has a short-term effect. So you notice that these are all mostly released monthly or less. So they do have a bit of a shorter term effect compared to the medium to longer term, where we have the GDP numbers, right? So you notice that, yeah, you can tell me that these are also released monthly. There is a monthly data, but what they also have is a quarterly data and also a yearly data. So these medium to long term news events do have the ability or the opportunity to actually change or reverse trend. You see GDP being a bit less so, but inflation and interest rates decision able to reverse trend. Okay, any questions so far? You guys have been very good, but a bit quiet. So I'm just making sure I haven't lost everyone. All good? Thanks, Os. Thanks, man. All right. So it comes down to the last slide, the news trading strategy. Good stuff, Simon. Hey, Elena, how are you doing? I hope it's a good fascinated. I hope you actually do apply, whatever you've learned here. And if you have any questions moving forward, please let me know as well. All right, so how I would say is that 3 news trading strategies. You don't have to apply all 3. What you should be doing is looking to see what fits better for you. And like someone just asked, James asked, then what's the ideal time frame? A couple of you have asked what's the ideal time frame. I would say that this is what you should be doing, right? This is only if you're more experienced, right? I like telling you guys about the M1 and the M15 time frames, but this is not something that everybody should approach it with, right? I think that if you stayed on the H1 or M15, that would be sufficient. So 3 ways of trading the news. One, you could be looking to enter. Okay, things to consider first is always, I would say, size down, right? Make sure you size down. And then also the next one is to check whether you are in profit. Overall, as an overall trading over the last couple of days, are you in profit or loss? Because what that affects is your overall confidence. Okay, I can't write, but I look like a 5-year-old scribbling, right? So it all affects your confidence. These are the things to consider. Size it down. Consider your profit or your recent profits and losses. How's your confidence level? And then always remember, put a big star there, is to take profit. Okay, it's not, when you're trading the news, it's not about, when I say take profit, it's not about hitting a take profit level. Not all your trades are going to hit take profit levels to automatically close, right? Always remember that as much as price can shoot towards the downside, it can straight away spike up. It can reverse against you. Close out your trade, get into a trade, close out at a profit. Never try and over expect a larger than a larger return. Okay, how do you boost your confidence when you go low? Go low, go slow, right? Do one trade at a time, build it back up. You do one trade at a time, and then you go one by one. You can only build your confidence by winning one trade at a time back again. Okay, isn't the news event the spread high? Typically, I haven't seen spread being too bad. I haven't seen the spread being too bad on news events. But what you do want to consider is that slippage, right? I did say here slippage. So when you consider all these points already, then you want to think about, can you, based on the analysis we did, look at the trend, look at the support resistance levels, look at what happened before. Can you get into a trade before the news release? Size it down, get into a trade before the news release, and catch the maximum move. The problem with getting in before a news release, and this is on H1 or M15 time frame, is that sometimes as it sits there, you enter the trade before the news comes out, it spikes down before it pushes towards the upside. You might have been right thinking to buy, but you might get stopped out before pushing back up. Okay, when you enter before the news release, you always want to keep your stop loss a bit tighter. Right, you want to keep a tight stop loss, which comes to the con where you get spiked out. But if you get it right, or if it doesn't spike you out, you can actually catch the maximum move of the news release. A bit of a safer way to do it is to have pending orders. Right, so you would see that prices at that point, you would say, okay, I'm based on the trend, based on the previous news, based on the previous reaction to the news, support levels, resistance levels, you think that it should be heading towards the downside, then you'll be looking at a pending sell. Right, you just set your pending order there, a sell limit towards the downside, stop loss, take profits all in place. There's a lot less emotion as the price move, as the news gets released. But what could happen is that you get slipped, right? Price actually shoots down. You don't get filled at that point where you have your order. You might get filled a lot lower than you expected or that you wanted. Then it affects your overall, affects to some extent your profitability. Okay. You do that on the H1 time frame. I wouldn't put pending orders on M15 just because it ends up becoming a little bit too near. If you're going to do that on M15, you might as well enter it just before the news. Okay, and then the safest way to do this is to react to the news, but this will also mean that you have to be really clear about what you want to do. All right, so wait for the news to get released. Understand that based on the news, is price supposed to push up or push down? And then look at the actual price action to show you whether it's pushing up or towards the downside. You can do this on the M15 or even smaller time frame like M5 or M1, right? Good thing about this, and I love doing this trading during the news release, is that I actually trade what I see. Right? I see the news happen, I trade based on what I see. But if you're not sure about what you're doing, you're going to get influenced by the price movements. Right? You can get emotional with the price movements and get affected. You might try and jump in as price is moving. All right. So what I want to do now quickly, as we come towards the end, is I want to jump onto the. Oops, where's my trading view? Okay, I want to jump onto this quick one and just show you what happened here on the US yen. Okay, so you can see here, this is the US yen on the H1 time frame. We just saw it shoot down. All right, we just saw it shoot down, and what I want to show you about is the Bollinger Band. Okay, so this is one of the things that I do I have on my charts as well. It's a Bollinger Band. Is that whenever you see price outside, this is very important when you're trading news, is when you see price outside of the Bollinger Band, you always anticipate that it's going to bounce back in. It's going to come back into the band. So this tells you that it's too late to get into a trade there. On the M15 time frame, you can see that big push towards the downside. Too late to get in, it bounces back up again. Okay, so we saw it push up towards that 149 almost 149.30, and a big intervention, most likely intervention from the Bank of Japan. And then last one, I want to show you this on the pound dollar today that I got into this trade, right? So I was just looking at it breaking out of that consolidation. I jumped into a trade. As it broke out of that Bollinger Band, I closed out within that few minutes, and then now it's reversed back towards the downside again. Alrighty. So I hope you guys had a good session. What did you think? Do you think you start looking at the news a little bit more, start trading into the news a little bit more? Super. Fantastic. Good to hear, guys. It is being recorded, so I think you can always check back on it, check back on the session, so you haven't missed too much there. Awesome. Hey, if you guys have any questions, please feel free to reach out to me, you know, and then I'll be happy to get back to you on these, you know, if you need any help of your trading journey. Elena, can you check back on this? I think you can check out the IC Markets YouTube channel. I think this should be uploaded as soon as possible. With that, take care now. Thank you all. Trade well, trade safe, and I'll see you again. Bye-bye now.